A deep self-belief in yourself, confidence. You have to be a confident person. And confidence is different than self-esteem. Our self-talk and building that confidence. And we build that confidence by knowing our method of trading. We have to know the insides and outs of it because every trading methodology is going to have their strengths and its weaknesses. And we have to understand the strengths and weaknesses of our methodology so that we know when it's most highly effective and we know when it's least effective. And when it's least effective, we've got the 2x4 rule and we've got other rules that we work on and we talk about during the day. And you guys will, anybody new will hear about them. We've got other rules that protect us from blowing up. This is a marathon. Take it easy. We do not need to make our fortune today or this week. Be here tomorrow and continue to progress. We all have to continue to strive to become more and more confident. If we run too fast, we run the risk of burning out in a sprint. And this is not a sprint. This is a marathon. Hard work is going to help you become more confident, but not the hard work of, I've got to have more knowledge and more information. I like to make fun out of people who like to sound smart because they get themselves turned around and screwed up. The more simple we keep trading, the better off we're going to be. The more we complicate it, the more outside information we bring, the more difficult it's going to be. If only I have more information and more knowledge of the oscillators. If only I have more information, more knowledge of market profile. You know what market profile is good for? Everybody thinks that market profile is the holy grail for trading, don't they? Market profile, according to the man, Pete Stottlemyre, who put it together, invented it, it's no longer effective and has not been effective as a method of trading since 2003. The godfather of market profile, Jim Dalton, he doesn't make trading decisions based off of it. What he does is he uses market profile to put the market into context. He has other ways of making trading decisions. But yet that doesn't teach people from learning more about it and spending a fortune to try to learn more about something so they have more knowledge, more info, because that will make you a better trader. It won't. That's not what's going to make us a better trader. What's going to make us a better trader is you. It's me. It's my mindset. It's what I bring to the screens. And I've been struggling these last few weeks because I'm trying to build a track record and trying to start a managed futures hedge fund and not trading my own money. It's a completely different mindset. And one that I was not wholly prepared for, and one that I've struggled to get on the other side of. Just when I'm starting to get better, and I increase my sights, and I start falling into some of the pits that we talk about. But it's fun because I'm open about it. I'm honest about it. I'm not hiding it and telling everybody how great I am at it, because I'm not. I will be, but I'm not yet. More information on candlesticks or, Delta contours or Denopoly or DeMark or Downey or Mark Fisher indicators, any of it, is not going to help make me a better trader. Learning how to trade the price action as it is. Learning how to trade the price action as it is, not as I want it to be or not as somebody else wants it to be, is not going to help me make money. There is no golden chart. There is no great, perfect, wonderful levels. I can give you the high and the low of the year, and most of you will still lose money. And that is a statistical fact. I can give you the high and the low of the quarter, and most of us are still going to lose money. Because it all comes down to mindset. I'm not in the pit anymore. I'm not competing against anybody or anything except for me. The only person I'm competing against is me. We came out of the opening range today at 36. We were short. I almost got out. I was going to get out, and that market slammed down. I didn't like the price action. The market slammed down. So if you missed it, so what? There's always tomorrow. Today we experienced JOMO, the joy of missing out. That's the coolest part, JOMO, not FOMO. I never heard of FOMO until I started tweeting my trades in August of 18. I never even heard of it. FOMO. I know what it feels like to see the market missing out on a move. Yeah, I get that. But I've never heard of FOMO, so we invented JOMO. JOMO is the joy of missing out. I almost missed out on this break, and I would have been fine. I wouldn't have made a trade. If I wasn't short those when they came out of the opening range, I wouldn't have made a trade the whole day. I wouldn't have. As it was, I was going to get out of it, and the market fell apart just as I was going to get out. I didn't like the price action. I was going to cover my shorts, and ba-boom, the market fell apart. So we don't chase trades. If you don't have them from the opening range, we don't want them. We'll wait until tomorrow. Who wants to sell 92s and buy them back at 10? Who wants to sell 10s and buy them back at 19? Who wants to buy 19s and sell those back at 09? Not me. Not me. Not me. We've got our 3 rules of execution. We've got our 4 pillars of capital management. We've got our 3 hard and fast rules. We pay for every trade. We use a stop on every trade, and we use the 2x4 rule. And that's it, guys. That's it. That's how easy this is. We are short below the opening range. We are long above it. We will not take every tick down nor every tick above. That's where our 3 rules of engagement, our 4 pillars of capital management come in. And then work and experience, which is going to show us which attempts we can take before we get out and how we manage our stops. Let's start to develop routines and habits that are going to help us trust ourselves, that put us in a spot that enable us to become the best traders that we can be. So with that, everybody, sleep with all the angels and all the saints, and nobody fights alone.